Hi there, QuickBooks experts. I hope all is well, and I pray that as you are viewing this video, that you're in the best of health and spirit. This video will cover Chapter 4, Recording Operating Activities, Sales and Cash Receipts from QuickBooks Online for Accounting 2026. Upon the completion of this chapter, you should be able to add a new service, product, and customer, record a sales receipt, record an invoice for services rendered on account, record an invoice for products sold on account, record cash receipts, payments received on account, deposit payments received on account, and lastly, prepare trial balance and transaction detail by account reports. In Chapter 3, we modified company settings. We added new accounts to the chart of accounts. We also added beginning balances by using journal entries. We added customers, vendors, products, and services, and we even closed the opening balance equity account. In this chapter, we're going to add operating activities like sales receipts, invoices, and cash receipts. So before we jump in, I want you to realize that all businesses, they participate or engage in several activities, and they're broken out into three distinct areas. The first are operating activities. Second, we have investing activities. And lastly, we have financing activities. So all businesses, whether big or small, they break these activities out into these three things. So operating activities, to kind of make it practical, think of it in your everyday life. Operating activities are your day-to-day living. So these are the activities that keep life and the business running every day. So if we're thinking about it from a personal and individual perspective, things that we engage in on a day-to-day basis would be buying groceries, paying phone bills, earning a paycheck, working, things of that nature. For a business, their operating activities is essentially their primary purpose for operating. They're selling products. They are providing services to customers. They have to pay rent. They pay wages, utilities, and things of that nature. So when we think about the operating activities, is basically the normal in and out cash flow of survival for us individually and also for a business. Investing activities, we'll see that in a later chapter, but investing activities, think of it as big purchases for the future. So for an individual, this would be things like buying a house, buying a car, buying a new laptop for school. So we're making purchases now with intentions for the future. For a business, that would be them buying machinery, buying land, selling equipment. So they're not necessarily everyday things that happen, but they're long-term investments that can help shape the future. And then lastly, we have financing activities. So this is how we pay for things. So if we think about it in our everyday life, this is how we get money to afford our lifestyle or pay for big purchases. So for individuals, typically, if you want to go to school, if you don't have all the money, you're going to take out a student loan. Or if you want to get a car, you don't have all the money, you'll finance it, get money from a family member, things of that nature. For businesses, what they'll typically do to finance their operations, they'll borrow money from the bank, or they'll issue stock so individuals or other corporations can invest their money into the business, or corporations can also issue bonds whereby they borrow money from individuals and corporations. So just want to give you a clear understanding. In later chapters, we'll learn more about investing and financing activities. And in this chapter in particular, we'll focus on those operating activities, which is essentially, again, the normal in and out cash flow of survival for the business. So in this section, we already have experience in a previous chapter adding services, products, and customers. So we're going to scroll down. I'm already logged in. And again, anytime you have any questions, you can always use the video link, and that takes you to the how-to section. So I'm already signed in. It asks me to click reports, go to my custom reports. I already have it saved, so we click on it. And we want to make sure that our dates are correct. So let's say in the event that you go to custom reports and you don't have it saved, what you would simply do is when you open your trial balance report, you would select save customization, and that is how you can see it anytime you go to the custom reports. All right, so the first thing we want to do is we want to make sure that we are starting off on the right foot. We want to make sure that everything is correct. So we do that by comparing our trial balance to the trial balance that's in the text. So I always start off with the totals. I see here my total debits are $322,800. My total credits are also 322,800. But one thing to keep in mind, just because your total debits and credits are correct, it does not mean that the account balances are correct. So now we're going to dig a little deeper. My checking account 25,000, accounts receivable 70,000, inventory 172,800, prepaid expenses of 15,000, accumulated or original costs rather for the equipment 40,000. That ties perfect. Now I'll move on to the credit side. My accumulated depreciation is 10,000, accounts payable 56, long-term business loans 50, common stock 1, opening balance equity is 0 because we've closed it out, and return earnings of 205,800. Perfect. Everything ties, so we are good to go. So now the next step, we click the gear icon. And in this case, because I have 2 tabs, I'm splitting the screen. That is why we don't necessarily see the gear icon. If I was just using, the one screen, then I would see the gear icon. But because I'm splitting the screen, which some of you might be doing, you click the 3 dots. Sorry, I lost my train of thought. You click the 3 dots, then you click on settings. All right. And just a very quick thing that I want to show you. So in the event that when you get into QuickBooks, you see this setup, again, you are using the new version of QuickBooks. In the event that when you are in QuickBooks, you see this setup, you are using the older version of QuickBooks. So just been some changes to the interface, still does the same exact thing, but obviously they are eventually going to do away with the older version, which you're seeing here. So to ensure that you are following along with the steps, and so that way there's not too much nuance, I would strongly suggest that you go to settings and you choose to switch to a new version of QuickBooks, so that way you would see the exact same thing as I am going through the video. I personally like the older version of QuickBooks, but hey, things don't always stay the same. So nonetheless, still a powerful program, and we're going to get to it. So I click on the 3 dots, we go to settings, and we go to our products and services under lists. Then we're going to click new, and we're going to create a new service. So this service is going to be cleaning. And if we scroll down, it says, check the I sell this product service to my customers. So this is already checked. And then we sell it at a rate of $500. And then, it'll also want you to enter it in the description. I'm just going to take the shortcut route. I'm going to copy and paste it. And then for the income account, it's going to be service revenue. And then it is not going to be taxable. For the most part, services are not taxable. Typically, only tangible products are. So we're going to change it to non-taxable. We scroll down, everything ties. We have cleaning service. I sell this service to my customers. Is checked, cleaning at a rate of 500, and the income account is service revenue, and it is non-taxable. So from there, we select save and new. And now we're going to add an inventory item. So we select inventory item, and we start to type in a name. This is the TIG 25ZX. And we're going to type 0 in the initial quantity as of 01/01/2027. And we're going to select inventory as the inventory asset account. And we're going to type in the description. But again, I'm going to take the little easy route. I'm going to copy and I'm going to paste. If you want to type it again, feel free. All right. So we'll type in this information. And then we're going to select boats as the category. I mean, they could have said this earlier because obviously we were here first, but nonetheless, this is going to be a part of our boats. And then we're going to type 225,000. So we sell it for 225,000 and we purchase it for 180,000. And then sales is going to be our income account. Cost of goods sold is automatically chosen, so we are good to go there. And then from there, our sales tax category is going to be the taxable standard rate. So we just scroll down, taxable standard rate, and we are good to go. All right. And keep in mind, in the event that this is not showing, sales tax is not showing, that means that you have not set up sales taxes yet. So what I would strongly suggest is you click on the hyperlink and you go to the sales tax section to get sales tax set up. In the event that you don't see sales tax popping up, that would be the reason why. So we select save and close. We've added both. It doesn't tell us who our preferred vendor is. Let's see. Just want to make sure I didn't skip over it. Nope, doesn't show. All right, so we click save and close. And now it's asking us to click the category title to sort the products and services. So we click category and it sorts it. So here we have the Thai 25 ZX on the boats, the Malibu Sportster LX, and the Malibu Sunset LX. And then we have cleaning. So next is asking us to click sales from the navigation bar. So we go to sales and then we click on our customers. And as we see, obviously, there's been some change. Now, instead of sales, customers has its own section. Before, if we go back to the older version of QuickBooks, you would find customers under sales. So they're trying to streamline things a little easier. I'm sure, much like if you were taking a class, or a lot of times you use a product or a service and they say, hey, give us feedback. I'm sure that a lot of these changes are due to feedback from customers and professionals, as far as making QuickBooks more user-friendly, ultimately. All right, but same thing. And again, with QuickBooks, there's a lot of ways in which you can navigate things. You can type in customer here, and then it'll take you to customers. So there's a lot of different ways in which you can navigate QuickBooks to do the exact same thing. So we open in navigation, we go to customers. Oops, sorry about that. We select overview, and then from there, we are going to be adding a new customer. Oops, sorry about that. So customers, and we click on customers. And then from there, we're going to add a new customer. So this customer's name is James. Last name, Rogers. The email is jrogers.com. Again, I'm going to take some shortcuts here, make it a little easier for myself. All right, we have his mobile number. And then for the company name, you're going to type in, or you can follow along with me, copy and paste. All right, Performance Rentals. And this is going to be the name that we decide to print on checks, the Performance Rentals. And for the address, we have 15 Highway 22. This is in Orlando, Florida. And we have our zip code. And then United States is the country. All right, so we input all of this information, and then we are going to click Save. And then it asks us to click on the customer details. Well, all of the customer details, it already pops up. We see Performance Rentals, we see the email, the address, and all this different information that is here. So now we're going to click the Edit button, and we're going to scroll down to the page next to Payments. So we'll scroll down. And then here we determine, all right, how often, do we want to be paid? Or what is the preference, rather, that we'll give to the customer? So, like the commercial said, it's my money and I want it now. So that's typically where on the invoice you would select due on receipt, rather. If the customer pays you right away, hopefully they do, right? Typically some customers do. Typically some customers, they'll drag their feet, but it ultimately all depends. Some have cash flow problems, all of these different things that happens in the real world. But nonetheless, if your policy is that you want to get paid once the invoice is sent, that is what you expect. You select due on receipt. Some companies, they give you 15 days to pay it. Some companies 30, some companies 60. And oftentimes what companies will do is that they will give you a discount if you pay within the allotted time. So we changed it to net 30 under the payments section. We select save. And then we see this is ultimately, Performance Rentals, their information. So we go back to our dashboards, we click dashboard, and we've added a new service, added a new product, and a new customer. Next up, we are going to add a sales receipt to record cash sales and invoices to record credit sales. So Whenever a business provides a service or sells a product to a customer, there's three things that can happen. The customer pays right away, the customer chooses to pay at a later date, or the customer pays a portion now and they're going to pay the rest later. So a business uses sales receipt to record sales transactions on a daily basis when payment is received at the same time that a product or a service is delivered. Sales invoices, on the other hand, this is essentially used to record sales transactions when customers are granted credit terms and given some time to pay. So simply stated, you issue or record rather a sales receipt when you sell the product and you provide the service and the customer pays you right away. On the flip side, we use an invoice when we sell the product and provide the service, but the customer does not pay us right away. So in either case, sales are going to be recorded whenever the product is sold or the service is rendered. So this falls under the revenue recognition principle by GAAP, generally accepted accounting principles, and they don't care, right? If the customer pays you in advance or if the customer pays you after the revenue, or after, let's say, trying to think of a practical example. Okay, so let's use this example, taxes, right? We'll use a tax return. You are professional, an accounting professional, and you provide tax services to a client. So the customer can pay you before the work is done, or the customer can pay you after the work is done. Under GAAP, generally accepted accounting principles, their key thing is, hey, when did you finish the tax return? That is ultimately when you have earned the income, and that is when you are going to record it as revenue. So that is the revenue recognition principle. So to add sales receipt and invoices to Wild Water Sports Company, we're going to do the following. So we're already in Wild Water Sports. We don't need to open it up again. So in the old version, it'll show you plus new. In this version, it shows you plus, or it'll show like create. If we make it a little bigger so you can see. So right here shows you to create. We're going to make it a little smaller. All right. So we click the plus, and then it's asking us to select sales receipt, and sales receipt falls under customers. And we're going to add a new customer. And the name of the customer is Southtown Water Sport. Water Sports. This is our new customer. We want them to pay us right away. So we're going to change the terms to due on receipt. And then we're going to input the address. And the address is 333. Well, I'm not going to type it. I'm just going to copy it. All right. So 333 Scott Futrell Drive. This is in Charlotte, North Carolina. And the zip code is 28208. We are going to save it. The date for the sales receipt is going to be January 4th, 2027. And we're going to select the check from the payment method. And the reference number is going to be 6985. And then it says for us to select payments to deposit from the deposit to drop down box. So we'll change it to payments to deposit. And on line 1, we're going to select Malibu Sportster LX. Purchase 1. And we press tab. And then again, because we are selling a physical product, it is subjected to sales tax. So in the event that, let's say, you set it up incorrectly, what you can do to ensure that the tax is being calculated, you can make sure that that is selected ultimately. So when we scroll down, we see, yes, the item is being sold for $52,000, but sales tax is also being collected. So it wants us to click see the math. We know the business is in Florida, so therefore they're in Florida in Orange County. So in total, the total sales tax rate is 6.5%. So that is why they owe $55,145. So we select save and close. So that was us adding the receipt. The customer paid us right away. But now we have a situation where the customer didn't pay us right away. So we go back to under our customers, we select invoice. And there's just, some customization, some things that you can do to fix it up. The date is January 6th, 2027. So I'm just going to update that. The customer is going to be Performance Rentals. Net 30 is already selected. The invoice box shows us 1002. We're going to scroll down to line 1. This is going to be Malibu Sportster LX. Oh, sorry about that. Sportster LX. And on line 2, we're going to type in Malibu Sunset LX. And they also purchased one. So now if we scroll down, we see, all right, they have one Malibu Sportster LX, one Malibu Sunset LX. Both are tangible products. Both are subjected to sales tax. So when we scroll down, it shows that Performance Rentals owes us $118,770. So from there, we select Save and Close. And now it's asking us to record an invoice for services rendered. So we click plus create and we go to invoice. And now we're going to be adding a new customer. So we select add new. And the name of this company is Florida Ski School. And I'm personally just going to, go in order. So they already gave us the address. So I'm going to input the address, and then I'm going to update the payment terms. So I'll scroll down. The address is 10900 Chase Road, Windermere, Florida. And we have the zip code. Then we select save. Oh, sorry about that. All right, I'm going to go back and edit for this customer. So net 30 for their terms. And then January 10th, 2027 is our date. And we're going to select diagnostic service as our service. Quantity is 4. And again, as we see here, sales tax is not selected. Why? Because services are not subjected to taxes. So you want to keep that in mind. So from there, we select Save and Close. And then we go to sales. And then remember, again, there's been some changes. So we can click sales transactions, and this shows us the different sales. So again, here it's telling you select sales and all sales. But again, because of the changes to the interface, you select sales and go to sales transactions. It'll take you to the same place. So we see, and if we were to put it in order, so we see it the same way on the screen. We see journal entry number 3 from Refugio, 70,000 is open. We have a sales receipt, 1001 from Southtown. I'm missing a W from Southtown Water Sports. They paid us $55,145. We have invoice number 1002 from Performance Rentals of $118,770. And we have an invoice 1003 for Florida Ski School of $2,000. All right, so I'm going to make some updates quickly to some of these customers. All right, so Southtown Water Sports, Southtown Water Sports, perfect. And then for Florida Ski School, I'm going to update for their net terms. All right, so don't make the same mistake I did. Perfect. All right, so we're good to go. All right, so we officially learned how to add sales receipts and how to add invoices. So now we move on to cash receipts. So in QuickBooks Online, the concept of cash receipts is referred to as receiving payments. Thus, to record the receipt of a payment from a customer, we use the receive payment item in the create menu to record the transaction. or we can use the receive payment from the action column in a customer's list of transactions. Once the payment is received, it's going to be deposited into your bank. It's a separate but important process in QuickBooks Online. So a lot of times what I see happen in the profession is that there will be outstanding accounts receivable, but in all reality, the customer actually paid. But the issue is whomever is working on the books, they didn't select receive payment, or the deposit that came into the bank account, they didn't link it to the invoice. So this is a very, very important area to understand in QuickBooks, because again, as we see here, we have customers that owe us. I'm going to go back to sales transactions. So we see Refugee still owes us. Performance Rentals in Florida Ski School, they owe us. So we want to make sure from a business perspective that we are on top of how much our customers owe us. So with that being said, we select plus create or plus new, we select receive payment. So this is when customers, they pay us based on their outstanding receivable. So in this case, it's telling us Refugio paid us. So we select Refugio. January 12th, 2027 is going to be our payment date. They paid us with a check. And we are going to select payments to deposit in the deposit to box. So payments to deposit. And then we see the journal entry 3 is here. So we check journal entry 3 because the $70,000 that they give us, it is associated with journal entry number 3, the $70,000 that they owed us prior to us beginning to use QuickBooks Online. So we select save and close. And here we're saying, recall that when 2 payments above were received, they were recorded to an account titled payments to deposit. And now it's time for us to deposit one of those payments to our bank and record that the deposit is into our checking account. So before we do this step, what I want you to understand is I want you to be practical, right? So in the event that you are running a business and a customer comes and gives you a check, for the most part, it's typically not deposited every day, right? Imagine working for a company and, one day one check comes in, another day 2 check comes in, another day there's no checks, another day there's 3 checks. That would be very inundating. So simply stated, for most companies, what they will do is that they have a designated day to go to the bank to deposit all of the checks. So that's ultimately what payments to deposit represents. Think of it as a company having a drawer where they are holding on to the cash and the checks that were received by customers. And at a later date, they're going to take it to the bank and actually make a deposit. So we're going to select plus create plus new, and we're going to make a bank deposit under other. We're going to select the account as our checking account because we're putting money into our checking account. The date is January 12th, 2027. And we are going to select the payment received from Southtown Water Sports. So that $55,145, we are depositing it into the bank account. So we select save and close. So in Wild Water Sports, and the cases that you're working at the end of the chapter, you're asked to create a trial balance. So one of the key things is with the trial balance, this is helping us to know whether or not we are on the right track. You want to compare the trial balance in your QuickBooks Online to the trial balance at the end of the chapter, because that lets you know if there's any differences and if there are any errors that need to be fixed. So a usual explanation for an incorrect trial balance report is maybe you recorded a transaction in an incorrect period. So we see the dates here are 2027. Maybe you recorded something using 2026 as the year, or 2028, 2025. So that can ultimately be one of the reasons why. Maybe the transaction was not recorded at all, or maybe the transaction was recorded incorrectly. You used the wrong account. So in order to investigate, that is why you would use a transaction detail by account for a specific period, because once you create this report, it's going to show you all of the transactions that were recorded, ultimately leading you to determine where the error is, so that way you can fix it. So we're going to continue from where we were. Again, we didn't log out, so we'll just keep working. We're going to click reports from the navigation bar. We're going to go to our custom reports. We will select trial balance, and we're going to change the date from January 1st as the ending date to January 13th as the ending date. And from there, we select run report. So now we scroll down and we want to make sure everything ties. So again, I always start off with my total debits and credits. So my total debits are 498,715, as well as my total credits. So we're good to go from there. But again, you always want to double check the individual accounts. So my checking account is 80,145. My AR, my inventory, my payments to deposit, prepaid expenses, and equipment original costs, those tie out. And now I'm comparing it to my accumulated depreciation, accounts payable, Florida Department of Revenue payable, that's my sales tax, business loans, common stock, opening balance equity, retained earnings, sales, and service revenue. Those tie out, as well as my cost of goods sold. So this lets me know that I am off, to the right start. So now we go back to our reports. And I don't have the other one saved, so I'm actually going to make that a custom report. So now you'll get to see how we make custom reports. So we have transaction, detail by account. Click on this, and I'm going to save the customization so that way I see it going forward. All right, so let's see, report name. And we're gonna run the report. All right, so we just saved it. All right, so they couldn't change it, so let's save it. All right, perfect. And then now we're gonna change it to all dates. And I'm actually going to update this. All right, perfect. So now it was saved. So now I can see all of the different transactions ultimately that took place. So I saved the customization, and now you have the option. You can choose to print it. You can print it, the physical hard copy to a printer, or you can save it as a PDF. You can also export it to an Excel, to a PDF, or to a CSV file. So one of the key things is you need to verify that the balance and the transaction detail by account match the ones that are as you see above. And in the event that it doesn't, something's wrong and it needs to be fixed. So this brings us to the end of chapter 4, recording operating activities, sales, and cash receipts. So we've now added customers, products, and services. We've also recorded a sales receipt. This is where we provide a service, sell a product, and the customer pays us right away. We recorded an invoice. This is where we provided a service and sold a product, and the customer is going to pay us at a later date. We've also recorded payments received from a customer, and we've made a deposit to the bank account. So these are operating activities. There's going to be some additional operating activities related to purchases and cash payments that we are going to learn about in chapter 5. So again, this brings us to the end of chapter 4, recording operating activities, sales, and cash receipts.